All right, we'll move to our second presentation of the evening, which is ResilieNomics Strategy for Miami. Welcome.
Let me get hooked up. Hopefully you can hear me.
Yes.
Okay, thank you for the invitation. I'll be talking about a ResilieNomics strategy for Miami. And these are the topics I'll be covering. I'm an engineer by training and spent my career building and running a large construction materials business. I've lived through many hazards, but surviving the World Trade Center 9/11 glued the question in my mind, why are the buildings weak? Not why are the hazards strong, but why are the buildings weak? A few years later, I helped the UN Disaster Reduction Office form a global network of companies that's now known as ARISE. Upon retiring 10 years ago, I founded the nonprofit Resilience Action Fund, and FIU named me Distinguished Expert at their Extreme Events Institute that houses the Wall of Wind. A decade ago, I wrote the book Resilience, the Ultimate Sustainability, which inspired the PBS documentary Built to Last with a question mark. Last year, I published the book ResilieNomics and produced the PBS film Built to Last, Buyer Beware that's currently showing around the country. RAF activities of interest include the Mark Samuelian Resilience Awards, now in their 4th year, honoring the late Miami Beach Commissioner who was a friend, the Building Resilience Index that I'll cover later, and the ResilieNomics in Action Fellowship, launching this year for early and mid-career professionals interested in buildings and resilience. When talking buildings, I wish to clarify that resilience and green are two distinct qualities. Green meaning small environmental footprint and energy efficient, and resilient meaning surviving hazards and continuing to function. The overlap is what I call sustainable. I disagree when we automatically label something green as sustainable. If it's destroyed and you have to build it twice, it's neither sustainable or green. ResilieNomics is about making homes and communities more resilient by harnessing the market and economic forces that drive consumer and policy decisions to grow and preserve household and societal wealth. Essentially, it connects resilience to wealth formation, and inversely, non-resilience to wealth destruction. In other words, it's about making the invisible hand of Adam Smith more resilient. Markets work better when there is knowledge, transparency, and competitive pricing. For long, property markets at the household and small business levels have been opaque on resilience, with little in consumer knowledge, limited transparency, and resilient blind pricing. Essentially, a buyer beware market, but that is changing. I foresee the rattling that started with insurers will spread to lenders. Both will impact consumers and, in the end, values, as prices between resilient and non-resilient properties begin to differentiate. I also see markets moving faster than governments. Governments appear to be better at making emergency plans than resilience plans. They often confront the dilemma: should we wait, should we resist, or should we adapt? Fears are loss of revenue and investment, plus resident opposition, including NIMBY, not in my backyard. Disasters, however, become their turning points. Pre-disaster, it's easier for government to plan, but difficult to implement. Post-disaster, calm planning is difficult, but implementing a plan that is set in advance becomes easier. So I recommend to plan now, even if you can't fully implement. Let's benchmark government best practices in 4 hazard-prone cities. Miami, hands down, has the best wind mitigation. Since Andrew, our wind standards are considered global best practice. Unfortunately, That's where it ends. Houston, post-Harvey, adopted the best water mitigation, raising minimum freeboard to 500 years plus 2 feet for homes and 3 feet for critical buildings. Norfolk has the best public disclosure, identifying and communicating their resilience zones. Finally, with so many grandfathered, vulnerable buildings, San Francisco adopted the best sunset programs, setting deadlines to retrofit seismic vulnerable properties. It won't be pretty when Harvey meets Miami. It'll be worse than Houston. And 30 inches, I believe, is optimistic since Fort Lauderdale recently saw 25, as we heard in the previous presentation. When it happens, I feel that our pumps, canals, and defenses won't protect lowlands. The only thing that will really matter is elevation. And to match Houston, Miami needs to raise its freeboard by 2 feet. Returning to Norfolk, a few years ago, their Vision 2100 carved up the city into segments based on flood risk and building density. They stated that future investments would prioritize highs rather than low-lying areas, essentially declaring their resilience and retreat, or as I call them, R&T zones. For a government, that was pretty bold, upfront, and honest. A signal that they intend to synchronize with markets. The 4 key elements of market resilience adaptation are measuring, disclosing, pricing, and rewarding. I'll touch on these. Regarding measurement, the lending world now has a resilience credit score for buildings called the Building Resilience Index, or BRI. During the last 4 years, I helped the World Bank's private lending arm, the International Finance Corp, IFC, create it. Why? The typical security for a multi-year loan is a building. Lenders now realize that codes are lacking, and insurers can change their minds annually. So they want to know how resilient their security is. BRI is a pure resilience metric with 4 levels, and it doesn't give credit for public seawalls and pumps. AA represents global best practice, and NR means not resilient. IFC is already using BRI in a dozen countries. They often co-finance with other banks. I foresee it won't be long before lenders adopt and apply this in the US. NRs may then discover they've become unbankable and uninsurable. How might a Miami building rate? BRI rates each hazard category, the overall rating being the lowest of the 4, called the weakest link principle. On wind, we're at global best practice, AA. On fire, we also rate high. Fortunately, we don't have geoseismic hazards. Not surprisingly, our weakest link is water. Thus, many Miami buildings will rate an R unless they're elevated or on high ground. Insurers and lenders are shifting toward measuring and pricing resilience. I like to tell people today that it's better to buy a house with an insurance agent than with a property agent. ResilieNomics illustrates this curve. Essentially, it says that you're resilient. The lower your resilience, the more expensive, difficult, and unstable your insurance market. I presently place Miami, and Florida for that sake, at the crisis level. Will we move up or down? The only way to go up is by becoming more resilient, not by inventing more financial band-aids. Consumers are starting to turn to non-government risk information. Plug any address in Redfin, scroll to the bottom, and you'll see a flood factor from 1 to 10. 1 to 4 is good, 5 to 10 is increasingly bad. Plus, you get maps showing risky areas, essentially defining our zones, resilience zones. I found it reliable and more complete than most government sources. Being easy, clear, and free, consumers will increasingly use this kind of information to screen neighborhoods and properties, and to purchase accordingly. On disclosure, you won't find these signs around Miami, but you will in other parts of the country and the state. Our local artist, Javier Cortada, tried to spread his elevation art. This was at a Coral Gables intersection until DOT made him erase it. Now his other elevation art sits hidden in some public parks and buildings where few people can see it. I ask you, why shouldn't every city bus stop visibly display its elevation? Does resilience really affect values? Last year, RAF did a study in Tampa looking at two neighborhoods in St. Pete, one at 30 feet elevation and the other 3 feet. We sought to know how the 2024 hurricane season affected the value of working-class single-family homes. We researched houses purchased during the prior 5 years that sold in the 5 months after Hurricane Milton and got a good sample size. The results astounded even me. Low-elevation homes sold on average 35% below their purchase price, while high-elevation ones sold 25% above, a 60% spread. Households who unknowingly bought at low elevation took a big hit that likely wiped out decades of wealth building on top of the stress these families suffered. How long before consumers get the message? The study can be found on RAF's website. It led to a Tampa Bay Times article that was reprinted by other media. Conclusion, the value and impact of resilience is real. Tampa got its wake-up call in 2024. Now drive around many of its low areas and you see homes being elevated, existing and new, and they're not waiting for incentives. In fact, all 3 2025 Mark Samuelian Resilience Awards went to the Tampa area, including the Tampa Housing Authority, that builds more resilient than many high-end private apartment developers. I don't see this around Miami. Sadly, we need a disaster to wake up. During the awards, a local official noted that elevated houses have little appeal here. My reaction? When Harvey meets Miami, being pretty won't matter. So what's the good news? In case you think I'm just a doom messenger. The city of Miami has the largest portion of the county's high ground. Our original settlers, though lacking degrees, could tell high ground from risky lowland. I couldn't find an official city figure, even at the Resilience website, but I estimate that about a third of the city's 36 land square miles sit above 10 feet. For me, these are our resilience zones. In my view, Miami's most economic path to adaptation is to redevelop its resilience zones. It's much less expensive to build resiliently on safer ground than on risky ground. The recent transit-oriented development district legislation and the Resilience Trust Fund move in the right direction, though I feel they don't do enough to incentivize freeboard, and they still reward development in lowlands. This is an example at the planned Little Haiti rail station, elevated, dense, mixed use, and multi-income. It could be a BRI AA. I view these corridors, both north and south, as Miami's resilience lifelines. So what do I recommend? Talk about resilience zones. Be open and transparent. Senate Bill 180 has tied the hands of Florida's governments, but it will expire October 2027. Be ready to increase freeboard at or above Houston. Prepare now. I estimate Miami we'll need several dozen Magic City-like developments. Incentivize and fast-track them. And finally, there's limited capital and time for infrastructure. Prioritize wisely. How much do we allocate to ready our R zones versus to defend T zones? I know this will involve a lot of debate. Bottom line, the goal is for government to nurture more resilient development and to create a plan that's in sync with the market transition that's already begun. A plan that speeds up the supply of resilient, dense, walkable, and transit-friendly residences will help grow and secure the egg nests of working-class households. The ResilieNomics in Action Fellowship applications are now open through the end of April, and the 2026 Resilience Award applications begin in June. Thank you.
Thank you so much, Aris. Appreciate the good presentation and all the data, especially the examples of the other cities. I really love to see the case studies of what other cities are doing right so we can learn from it. And in regard to, was it Norfolk, the Vision 2100 plan, where they've identified the different grounds and prioritized appropriately based on those. When we saw last year the Southwest Streetscape Master Plan presentation, which took into account topography inland, I thought that was really a great step in that direction. And I agree, the TOD along the ridge and densifying there, it simply makes sense. We're getting more people out of cars, reducing the mitigation of energy for transportation, and building more into resilient zones. And freeboard, I think, is a very important thing. It's what I've talked about a couple of times. I kind of lapsed after I got a presentation pretty far along, but I'm hoping to bring it back again this year. The city did do a T3 freeboard update, I believe it was 2024. That came before us, actually. And one of the reasons the structures in Miami don't look like what you showed of the stilts is because things can still occur beneath that elevation that can be knocked out in a storm event. So we actually see things getting closed that are non-habitable spaces. That was a step in the right direction for T3, but hopefully it'll expand to the other zones. And I'm sure there's a lot more we could learn from the books that you showed. I appreciate you sharing those. Did anyone else have questions or comments?
Chair, one question. What is freeboard? What is freeboard?
Freeboard is height allowed above base flood elevation. So it's determining the height where your first floor is going to be built. Did I cover that correctly?
Yeah, freeboard is essentially the amount of height allowed above the 100-year flood or base flood elevation, as it's called. You can voluntarily go above the minimum. That's the minimum. You know, when we say, base flood elevation plus 1, that's the minimum. You can go up to 5 feet, I think, is allowed. You can't go above that. They won't let you go above that. But and some people are doing it. In fact, I see more high-end homes doing it than middle-income properties doing it today.
And one question, you, by the way, I've been a big fan of your work, Mr. Aris, for a long time at the Extreme Events Institute. And you came across my work when I was getting certified with the United Nations for Disaster Risk Recovery Program using nature-based solutions. I think one of the biggest opportunities we have today here in Miami is to learn from the best practices of UNDRRIs. Have you seen, you've obviously been working all over the world. How do other cities and other markets adopt these UNDRR principles formally into their best practices? Could you share a little bit about some of that work, and thank you very much for your global leadership on that.
Well, when we looked to create BRI, we looked at what's the best of the best around the world. And, as I said, Miami, in terms of wind, has the best practices. And those kind of serve as the best in the world. For seismic, Japan has the best practices. For fire, it's kind of a mix. I used to think that the UK was the best, but after the Grenfell Tower, disaster, that kind of raised, for example, BRI requires a 3-hour fire rating to be at the AA, which is a pretty high standard. For water, BRI essentially sets a 3-meter level above local. It could be the sea, it could be the river, it could be the lake, or it could be a dry creek that can flash flood. But it says essentially let's say 10-meter minimum. If you're below 10 meters, you're an NR.
10 feet, 3 meters.
I mean, 10 feet, yeah. 3 meters, 10 feet. You're an NR. So, there's a lot of empirical information that's been collected around the world, and we had a global expert, group that kind of helped IFC do this, that looked at what's the best of the best in terms of not just theory, but actually practice that's been applied and tested and used over time. If you want to be a AA for water, you've got to be at 6 meters. And if you're in a tsunami area, even higher than that.
Oh, yes, very nice presentation. I've spoken a lot at different conferences about the economics of sea level rise and flooding, and I've always concluded that insurance is going to drive this train. And unfortunately, when it trickles down to the local economy or elected officials, they don't seem to understand where insurance is going over the next 10 to 25 years, and that risk is going to be greater, insurance costs are going to go up, banks are going to have problems with regards to lending because people who are going to be borrowing can't get insurance or pay the insurance premiums. Where do you see the critical intersection and when that's going to happen? Because for me, we are, like you said, a very reactionary society. Either our windstorm codes changed after Hurricane Andrew, Houston after their flood. And I don't see anything changing here to the level that it needs to change like it has in other parts of the world. So what has to happen, and how do we sort of drive the train in that direction to hopefully hedge against it before it happens so that we are in a position where insurance rates can remain reasonable and that we're actually elevating our roads, our homes, and pretty much everything?
Insurance rates should be the free market's pricing of risk. Unfortunately, they don't operate freely at the, let's say, house insurance level. Yeah, for big, buyers of insurance, there's a freer market there. But, we regulate insurance in every state. And the job of the regulators in many states is, how do we keep the rates down? How do we make insurance affordable? They don't realize that what they're doing is making risk affordable. In other words, if you subsidize insurance, you encourage more risk-taking. If NFIP, our own federal government, subsidizes, has been subsidizing flood risk for decades, they've enabled more flood risky development. That's what's happened. So, we've got to recognize that if we want to do welfare, if we want to help, those, pricing is not the way to do it. Pricing does more. If you try to do that through pricing, you do more damage. Find other ways to give people help. Don't distort the price of risk. Don't distort the price of insurance. And for me, the price of insurance needs to be higher, for a lot of properties. We also cross-subsidize. For example, if you do the right things and make your home or building resilient, you should be getting a discount. But guess what? You're not going to get as much discount as you should get because you're subsidizing somebody else who's vulnerable. So we do a lot of cross-subsidization. So, we've created our own problem there. When is this going to change? Well, already, the big insurers left Florida, several decades ago. What we have is kind of a patchwork of smaller companies, entrepreneurs, and what you've been seeing the last few years is this idea of these kind of mutual insurers that aren't really aren't risking anything. Basically, what they're creating is a pool of insured properties entities who are insuring themselves. And the insurance companies are just extracting a fee for service. They have no skin in the game. People don't realize what's happening, and a lot of what the citizens has been offloading is to these mutual insurance entities. Believe me, if there's a serious disaster, they're going to realize that the only thing they've had is insuring themselves, and therefore they've got to pay themselves. So, we've come up with these financial kind of, Band-Aids, I say, that don't really solve the problem. The only way to solve the problem is through resilience. Yes, Florida's trying some things. They've got the Elevate Florida program they had. But believe me, I calculate it's going to take 200 years at the rate they're funding it. It's going to take 200 years to address the problem. We're going to have a disaster before then, for sure.
I guess today has served its purpose. So hopefully we act with urgency in the opportunity that we've all taken of being up here and try to actively seek out best practices from our local neighbors from around the world and bring them here, discuss them and proffer them and share them with our elected officials. So we can do the best we can to learn and adapt from the data that we've seen in these two presentations today. Definitely need to be paying attention to the insurance market, and there was a county level meeting last year that I participated in. It was interesting. I learned a lot there, and hopefully other things like that continue to progress. Do you know if anything has come from the county insurance meeting that we participated in since the report that was published a couple months after?
No, I know that they continue to have those conversations and look into it, but I think there's definitely more conversations to be had.
Aaron, if I could just make one more comment, just for everyone's education. And the state of Florida writes the most flood insurance policies of any state in the United States. So those funds that are then generated by those policies go to pay for floods, usually in the Midwest, homes that get flooded out every year. FEMA and other organizations only just started telling people you can't build in these flood zones anymore because they've been paying every 3 years to rebuild all these homes, and that money's draining the state of Florida. When things reverse itself in probably the next 10 to 25 years, and Florida starts having to pay a lot of flood policies, the money won't be there. At one point I mentioned to our prior governor and others that they should try to find a way in Congress to keep some of those funds here and try to have others in the states where they're paying the most policies actually pay more, because when it comes to a critical mass, there won't be enough money for Florida to have to rebuild when we have major flood issues. But more of our money, like 60% of the premiums paid, go out of state.
One thing, one conversation that has been had is talking to insurance companies about the infrastructure investments that cities are making. And so I think that there could be definitely more conversations had along those lines that's not being taken into account for policies, within those areas. And I think that it doesn't fit into the modeling structure. I mean, I think just like you were saying that there's some subsidization, that's going on, I'm sure. So I think that the more that we are, as municipalities, investing in stormwater management projects, the more we should vocalize that, let people know, let people in the neighborhoods know, so that way there's multiple people having these conversations across sectors.
And we also need to prepare from, unfortunately, many types of flooding events. King tide, sea level rise, storm surge, and rain events, which in some instances use different types of barriers. Elevation would help all of them, but the back-based study looking to raise many structures would benefit those structures, but I'm hoping for a much more comprehensive solution or solutions, and hopefully that communication can continue what we were talking about of sharing it with the insurance companies, and we can be filled in the future on that. And also, Barbara was trying to do something kind of related to this discussion, and kind of ended with looking into the SAVE program that was recently adopted, which seems to be addressing that to some extent. So it seems like there are policies even recently at the city kind of moving in that direction, which is good to see. All right, well, thank you so much, Aris. It was a pleasure. Appreciate it.